Calls of the daytime. We begin with AutoZone, upgraded today to strong buy at Raymond James. Target to $3,100 from $2,850. So the price right there is kind of bumping up close to that. Jason, you own it.
Yeah, listen, I mean, it was a really nice print this past quarter. So I think, one of the things that I think that stuck out to me, one, international sales are growing really nicely. I mean, it's only 11% of their business, Mexico being most of that. They're starting to do business in Brazil, which I think is, they're starting to invest there. So I think that's going to grow nicely over the next couple of quarters. But what I think is the main thing for me is costs have come down for equipment. Equipment costs have come down dramatically, so gross margins are growing really nicely. That's going to be accretive going forward, and that's why we continue to like the stock. Also, the average age of a car is 12 and a half years, so AutoZone is obviously playing in that market.
Jimmy, Deere called a top pick at Oppie.
Yeah, I still sort of shake my head about how this has become a battleground stock, but I acknowledge that it has. Having said that, I think that the company really ripped the Band-Aid off in the last earnings report and level set where earnings estimates should be going forward. I don't think that they took down that guidance as much as they did with the intention of then underperforming. I think they set themselves a very low bar that they can clear going forward. I want to point out some things. The valuation here, very forgiving, roughly 12 times forward earnings. Also want to point out, crop prices have been in decline for quite some time. That's actually, paradoxically, when you want to buy a Deere, is in the anticipation that they will recover as they always do, and that Deere will participate as farmer income goes up with those higher crop prices.
Boy, I hope Jimmy's right. We've owned Deere in the Joe T ETF since October of 2022. I've owned it as well personally. I think the ag cycle, and I've said this throughout 2023, I think the ag cycle is over. We were sellers of Mosaic earlier in the year, back in April. We sold Corteva as well. This has been the one name that we've held on to, and the reason we've held on to it are all the things that you're citing, which is where you go bottoms up and you look at this company and you go, this is a different type of company. This is a different company in the agriculture business. But it seems to be overwhelmed by the environment, which right now is overly bearish. And if economic conditions worsen, I don't see it improving at any time.
Give me something quick on Regeneron while you're at it. Called a top pick at TD Cowen. They bumped the target to $1,000 from $900.
Yeah, this is a stock that has been in the ETF since January of 2022. So there's obviously a very strong gain there. The momentum is beginning to wane. So you have to keep a strong focus on this stock. Revenue growth a little bit weak in the last quarter at 14%. So we might be coming towards the end of the road.
Apollo Global, reinstated outperform at BMO. I know you own that too, but Anastasia, you got some thoughts on that? Price target to 108.
Yeah, I think the upgrade or the initiation positively makes sense, and I'm going to speak broadly to the private equity and the alternatives environment. There's a huge secular growth opportunity, of course, as these alternatives managers expand to the wealth management channel. That's the potential for additional flows, but there's also, I think, a cyclical pickup as well, because fundraising across private equity has been extremely slow this year. It's held up only because private credit and infrastructure fundraising has been pretty good, but exits have been virtually non-existent, and deal flow has been quite slow. But you fast forward to today, and now the valuations in private markets and private equity have reset by about 20%. I think that is getting some interest back into the space. So I would suspect that private equity fundraising does improve in 2024, and that obviously bodes well for alternative asset managers like Apollo.